Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, let's focus on another company, Cantabil Retail. That's a stock in focus. The company has put out, a release on the exchanges. They say they've achieved the milestone of opening the 400th store here in India. Well, to further understand the company's plans, as well as what's the outlook in terms of business, well, we're joined by Mr. Shivender Nigam, the CFO of the company. Hi, Shivender. Thanks so much for joining in. Always good speaking to you. Well, you'll have put this release out that you'll have added close to around, now you'll have opened up your 400th store. So congratulations on that front.
Thank you very much.
It appears in this year so far, that's in FY23, you've added close to around 22 stores, because as of March, you were at 378. And if you're at 400, then it'll be 22. My question to you is, you were looking at going to around 700 stores. So for this year, what is the store addition you're looking at? And also, what is the average revenue? Where do you break even on a store level? Go ahead, sir.
So thank you. Thank you for the opportunity as well. So yes, so we have been opened around 22 stores in Q1. And by this addition, as I told earlier as well, we are keep on opening around 7 to 8 stores per month. So this year, another addition would be around 70 stores would have been there. So this year, it would be ending as per our plan around 470 stores. And going forward, the same ratio would be maintained for next 3 years. As I explained earlier, around 1,000 crore of the mile we are being a target to achieve in the coming 3 years. So that would be the addition in terms of number of stores continuously for next 3-4 years.
Okay, and if we talk about just this year for FY23, what is the kind of revenue that you can see coming in based on, the number of stores that you just said that you're adding? So just for FY23, what could the revenue look like?
See, last year we closed around 383 crore. That was the pandemic would be the part of it. So we are definitely planning year on year around 25 to 30% of CAGR. So if I square of this one, so 25 to 30% CAGR, we are planning to continuous growth for the next 3 years to reach those 1,000 crore of the numbers. So you can add it up to those numbers, maybe around 600, 575, 550 would be the revenue for 23, what we are targeting at.
So in FY23, you're saying that
for next 3 years. Yeah.
So in FY23, you're saying you'll do revenues of close to around 570 to around 600 crores. Are we getting that correct?
Absolutely. Absolutely.
Okay.
Absolutely. And the plan is for the same 25 to 30% CAGR for next 3 years.
Okay, all right. My next question to you is, you're talking about big sales numbers, but if I look at your last few years, advertisement cost has been relatively lower. So as a percentage of sales, what is your average spending on advertising as well as promotion cost? And do you see this number scale up? Because we have seen companies in the past, when they get aggressive on sales, then they spend more, obviously. But yours is relatively lower. So give us that number.
So as of now, we are following the traditional approach of marketing. So we have a very good SMS campaign to the customer, which have been direct correlation with the customers. So as of now, we are having around 1 to 1.5% of our top line is the target revenue, target advertisement expenses. But going forward, we have a plan to reach the 1,000 crore of the revenue. We may leave up to other aspects of marketing as under plan. So 2% to 3% to 3.5% would be there. But as of now, we are having a 1.5% approx of the marketing, and that would be continue on the traditional approach.
Okay, if you can also, you've already taken us through what your revenue could look like. If you could also help us with what kinds of margins you're looking at on this. For the last quarter, we did get margins of around 25%. So is this something that you're likely to sort of continue at, or could we see a trend significantly higher?
As I last time explained, we are being approaching toward a very sustainable growth. So there are 3 kinds of margins will be there. One is a gross margin, which we are maintaining approximately 35%, and then it is coming to EBITDA margin and PAT margin. So what the numbers you are talking about is considering what I am giving is the post India's 116, because that's the notional adjustment as all the rental properties have been there. So as I explained, we are targeting to have a 55% of the gross margin, 20 to 22% of the EBITDA margin, and having 12% to 14% the moment my top line will increase it, that the PAT margin would be maintained, barring India's 116.
Okay, all right. Shivender, what is the difference in profitability between own margins and outsourced? I think close to around, out of your production, 2/3 is in-house and 1/3 is outsourced.
Correct.
So what's the rough
Correct.
difference, margin difference out there?
Yeah. We are having the same margin. We are negotiating with the same one third. As I told you, owned our Bahadur factory, which is hardly modernized plant, producing the one third, which can double the capacity. Because going forward with the 1,000 crore, all the existing numbers what we are selling, that will be double, more than double to this one. So that will be supplied by 2/3 of the fabrication as well as own production and 1/3 of the FOB, which is basically the knitting material which we have been obtaining from the Ludhiana. So in the same ratio that will always go, but the margins overall I'm talking about is the same for all the platforms.
Okay. All right. Shivender, we like to clear our viewers, all their queries. Now, some buzz was there that maybe you're looking at selling. I can see a smirk on your face. I'm wondering what to ask you now. But Shivender, there was some buzz that maybe, in fact, you could be listing some of your products on Nykaa's, platform or some other platforms as well. Could you confirm or deny that, or could you tell us more about that?
So we are already on an e-commerce platform as well. When we are talking about these numbers, so all the leading marketplaces being there, like Flipkart, Amazon, Myntra, and we have recently started the omni-channel model as well as company's own website. So since it still was a new baby, the 1% contribution will be there. So going forward, when I'm talking that we are taking it because all the professional team has been set up, the backend plan has been set up completely. So this is going to be the 5 to 10% in this one. So all the leading players would be there, whether it's a Nykaa, that would be on the cards. Then it is coming to our own website. Then it is coming to the omni-channel model.
Yes.
Everything is being on the card. Yeah.
So e-commerce from 1% of sales, you're saying it'll go to around 5%. Is that?
Targeting. We are definitely targeting.
By
this.
when?
So when I'm talking about these three, now down the line 3,000 crore. This year already we are planning to make it from 1% to 3 to 4%.
Okay.
And that is going to 5 to 10% down the line.
Okay. All right. Final question then. Promoter entity, they want to run the business, right? There was some buzz that maybe there could be a larger party that's interested in picking up stake, in pulling back the company. Are you looking at raising any funds first of all?
Again, I'm mentioning we are zero debt company.
Yes.
But no, all the expansion has to be done from this one. Promoter will only run the business.
Okay. There's no
other players.
There's no sellout plan.
There is no sellout plan, no dilution plan. We are definitely want a good financial institution with us, which can support to the company and make the part of their big plans.
It's good speaking to you, Shivender. We'll hold you on these numbers. So you're looking at revenues of around 570 to around 600 crores. Advertising spend and promotion spend as a percentage is around 1.5%. That will scale up gradually. And e-commerce as well. It's currently only around 1%. It's going to move up to around 3, 4, 5% in the years to come. And clarifying that if in case there was a buzz of any kind of sellout, that's not the case. They're not looking at raising money from the open market.